Good evening, this is Doc Severson for the Theo Night video for Thursday, April 6th. I'm cutting this video tonight a couple of hours before the closing bell, so whatever I show you today may be different by the time that you view this. But so far today we've had just appalling price action. It's just been absolutely going sideways. And I think the big surprise today is that so far we have not seen any follow through to the downside after yesterday's massive key reversal bar. Yesterday was another one of these days where we had good news based on the ADP report. And so what traders started to do was to discount tomorrow's non-farm payrolls report and anticipate that and price that in. And, the dip was bought once again. If you go back, though, over the last 5 weeks, every time we have had some kind of positive news, that has been sold into. And so yesterday was no exception. Key reversal bar with a higher high and a lower close. Everybody anticipating carnage today and perhaps the bottom of this range, or at least working towards the bottom of this range, which I've been expecting to be somewhere around 2,300 for a while. Just not getting it today. So right now, no catalysts are moving this market around. Meanwhile, while we weren't looking, actually what's happening here, and I went into this about a month ago where we had this very rare signal where we had exhaustion signals, not only on the monthly, but also on the weekly, as well as the daily. So all of this was happening around here, around when we peaked out, around the State of the Union address, which was at the end of February, beginning of March. So all that was happening at the same time. What has the market done since that point? Now, tops are a process, and so this is what I would expect it to do. But you have to admit right now that this consolidation has been very, very mild. This is almost a flag, if you will. In fact, you could say that this is a flag, or you could also say that this is more of a triangle consolidation pattern, which is setting up. So right now, actually, the market is doing precisely what it needs to do to work off this move. Now, when we do have these massive exhaustion signals that are on the monthly chart here, these do take time to work out. And oftentimes, the very first signal is not the only signal that we ultimately see. If we go back to a lot of these exhaustion signals that we've had over the years, many of them took a long time to work out. Many of them took months for them to work out and resolve whether that resolution was to the upside or to the downside in some cases. And by the way, guess what? This is not just the retail traders doing this. This is not just the retail traders that are buying up these levels, okay? Every time that we've had institutional selling into obvious retail buying environments, such as the last 3 of them over the last 5 weeks, the dip has been bought. And guess what? It's not just retail either. These are institutional fund managers holding their nose and diving in, chasing performance, because guess what? They're behind yet again. The other thing that concerns me about this is right now, nobody's buying volatility. So volatility, again, is going down again today. So there we are. We're up near all-time highs again. The market refuses to go down. Nobody's buying volatility. You can draw those conclusions for yourself right now, is that complacency still rules and we're not going anywhere just yet. Now, what we have to watch for in any case right now, so this is the Dow Jones, which has been hard hit lately, is to watch for this trend line between all these highs. So all we have to do basically is to connect the dots at this point and just connect all the highs together. So when we start to see markets making higher highs and higher lows and the trend line being broken, then we know that this consolidation pattern is over. Until that, still expecting to see a lower low come from this area. If it does not, if in fact what we see happen instead is a higher low and then a higher high from that, then this corrective pattern has been cleared. The only concern that I have at that point then is that if markets are going to try to rally with this lead anchor down here on the monthly chart, then what I would expect to see is that any rally attempt from this point may get up to former highs, may get close to that area, and then that itself is more than likely going to end up being the weekly lower high, and then we start to roll over. So this is all kind of an act, if you will. We're very early on in the play, and the only way that this market moves down is essentially to get everybody on the wrong side of the boat and then have the wind shift. I think that's what will happen if this corrective pattern does not play out properly to the downside and instead tries to break out. From there, I think that creates the lower high, then we roll over. That's when we truly get everybody on the wrong side of the bus. So, of course, the big risk event is tomorrow morning with the non-farm payrolls number. The consensus right now is 175,000. That should be a layup after the previous 235,000, especially with the trend and especially with the ADP report. So I would imagine that a good report is already priced in. If that number ends up being weak, this could be a case where actually bad news means bad news, that maybe the rebound is not as strong as we perhaps thought it was going to be. So we'll watch for that tomorrow morning, 8:30 Eastern Time, 7:30 Central. We should get movement tomorrow to break us out of this range one way or the other. But right now, complacency still rules. That's it for tonight's report. Thanks for listening. We'll see you tomorrow.